Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Let's dive right into today's story, because what just came out of Wall Street's clearing giant, the DTCC, is nothing short of historic. This isn't rumor. This isn't hype. This is a bombshell announcement that signals the clock is ticking for anyone still sitting on the sidelines of crypto. Think of it like this. In the 1990s, people laughed at the internet. They said email was a fad, and online shopping would never replace department stores. Fast forward just a few years, and the dot-com boom melted millionaires overnight, while those who ignored it were left in the dust. Today, DTCC is basically saying the same thing about crypto. Get in now or get left behind. For those unfamiliar, DTCC, the Depository Trust and Clearing Corporation, is the invisible backbone of Wall Street. They settle trades for stocks, bonds, treasuries, and more. We're talking quadrillions of dollars in transactions every single year. That's right, quadrillions with a Q. When an institution that size says crypto and tokenization are no longer optional, that's not just a headline, that's a generational signal. This isn't about a meme coin pump. This is about the very infrastructure of the financial system being rewritten on blockchain rails. Historically, DTCC and similar giants took pride in being fast followers. They let startups test new technologies, then swoop in later. But even their own directors are admitting that strategy won't work with crypto. Why? Because blockchain adoption isn't creeping forward. It's exploding. Once banks tokenize treasuries, once payments go cross-border in seconds, once investors trade tokenized assets 24/7 without middlemen, the old world is finished. We've seen this before. Think of Kodak ignoring digital cameras. Think of Blockbuster ignoring Netflix. The lesson? If you wait too long, you don't just lose market share, you disappear. Now let's talk numbers, because this is where it gets mind-blowing. The global financial liquidity reserve is massive. Bank deposits, stocks, and bonds add up to over 400 trillion. Real estate, another 379 trillion. Gold, 13 trillion. And then there's crypto, sitting at roughly 2.5 trillion. That's a drop in the ocean compared to the traditional system. Here's the kicker. Not all that money will move into crypto, but a huge portion will move into tokenized assets, digital versions of stocks, bonds, real estate, even commodities. And who's going to run the system? The same players who run it now. Wall Street giants like DTCC. This isn't about Bitcoin replacing the dollar. It's about blockchain becoming the pipes that everything flows through. So here's the message to retail investors. If you hold even a few $1,000s in digital assets, you're already ahead of the curve. Don't be discouraged if you're not stacking six figures. Less than 1 million people worldwide have a meaningful amount of XRP, for example. Think about how early that is. When Amazon stock first launched in the 1990s, only a tiny group had conviction to buy. Everyone else said, let's wait and see. And guess what? Those who waited missed life-changing wealth. DTCC's signal is basically Amazon's IPO moment, except this time it's for the entire crypto market. Now let's get practical. We're sitting on what many analysts call generational bottoms. I've been saying this for months, but the numbers back it up. Bitcoin ETFs are pulling billions. Ethereum staking is securing institutions. XRP is inching towards real-world utility and cross-border finance. We've seen examples of small trades ballooning into life-changing returns, not because of luck, but because of smart investors positioning themselves during accumulation phases, while everyone else was fearful. Leverage accounts carefully diversify into projects with real-world utility. And remember, once these bottoms are gone, they're gone. Just like we never saw Bitcoin at $1,000 again, we will never see XRP under $1 once this new system fully locks in. History is repeating itself. The Dutch tulip mania, the gold rush, the railroad boom, the internet era. Every wealth shift in history looked crazy at first. Early adopters were mocked, and then overnight they became legends. We're standing at the edge of a new financial renaissance. DTCC's Bombshell is the equivalent of JP Morgan in 1900 saying, we're going all in on electricity. You don't ignore a signal that big. So here's the bottom line. Wall Street's DTCC has confirmed what we've been screaming from the mountaintops. The sidelines are no longer safe. Crypto adoption is accelerating. Tokenization is inevitable, and the biggest transfer of wealth in history is unfolding right before our eyes. Don't wait for CNBC to tell you after the fact. Don't wait for banks to package it up and sell it back to you at 100x the price. The opportunity is here now. You've got money sitting in a bank account, earning scraps. Think about it, reallocating it. If you've been hesitant, dip your toes in. Maybe now's the time, because once the floodgates of liquidity open, there won't be a second chance to buy the bottom. Ladies and gentlemen, this is it. Enter crypto now or get left behind. Smash that like button, share this video with someone who still doesn't get it, and drop a comment below if you're ready for the ride, because history doesn't wait and neither should you. this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.